Give it up to my friend, Lance Spencer.
Gracias. El uno lance B. Y entiendo nada de que Eduardo habló, pero estoy aquí. Y gracias por la hospitalidad.
Hey.
¿Sí? ¡Perfecto! And now we'll do English. So yeah, I just wanted to do a little bit of Q&A and take some questions, take some answers, happy to tell some stories, and really let you guys direct this time however you want. So who wants to be brave and ask la primera pregunta?
That'll be me. I'll start it off.
¿Dónde? Oh, sing.
Hey, in SMB, did you physically trade at SMB?
So I spent my career at Trillium.
Okay.
And now I advise for SMB. Yep.
Got it. So at Trillium, that was in New York?
Correct. And so I started in New York, then I opened up and ran their Chicago office.
Okay. So, para la gente que no sabe, he worked for one of the prop firms that él trabajaba por una compañía que se hace lo que estábamos hablando más temprano sobre los proprietary trading firms, and this was one of the larger ones out there. How was the dynamic, like sharing? Did you thrive off the energy in the office?
Yeah. So for all of you, I think one of the most important things to recognize is the importance of having community, and I'm sure that's why a lot of you are here. And so I was fortunate enough to work for one of the best prop firms out there. And so many people ask, what do you think that did for your learning curve? I think if I did not have that level of mentorship, I would not have survived. And so what it does is it allows you to learn so much faster. It allows you to make less mistakes. And so the question and the challenge that I've done for many people is propose this idea of a trading pod. And my question to you all is, how can you all use this event to build communities where you trade with each other? And as I've spoken with some of you, mostly in English, some in Spanish, and a lot of you all are trading on your own. And so my challenge to each of you is, can you get 5 or 6 people and all exchange emails? And can you then share what I call, or really SMB started this, the daily report card, where every trading day you write up a summary of your trades, you dissect some charts, and you share it with 5 or 6 people that you meet here. And how long can you sustain that practice? Maybe some of you will make friends from here and you're gonna do a monthly review. Maybe you're gonna do an annual review. But my question is, how can you all find people maybe one level above you, one level below you, and start to group up and learn from each other? And the biggest, most powerful part of working for a prop shop is I was surrounded by traders with more experience than myself. Without that, I would not have been able to make it. I truly think that if I started as a retail trader, I would have failed. I would not have had the resources, especially 15 years ago. There wasn't the public knowledge out there. There wasn't the quality of education that's just publicly available that there is now. And so that was the big benefit of a prop firm, and that's what really helped me. And I think it just helps your odds of success, whether you're new or whether you're advanced, it just elevates it so much. So that's my big challenge to each of you. What other questions from there? Thank you, Sang, for kicking it off.
Preguntas, alguna pregunta que tengan. Tienen enfrente a un multimillonario, por amor a Cristo, aprovechen, porque después andan, hay que los vende humo, hay que no sé qué vaina, agarren ahí, dale, allá, alguien que, porfa, alguno que agarre el micrófono, Ricky o...
¿Recomendarías entrar en prop firms a personas que tengan poco capital, digamos, para escalar el capital que tengan?
Would you recommend to get into a prop firm for people that has little to no capital?
So, and Eduardo, if this is confusing, I might need your help. But so,
okay.
I worked for a traditional prop firm, and that prop firm provided education, It provided capital, it provided technology, and it provided community, and the most important part of that was training. And so nowadays, over the last couple years, what's really been bastardized is the prop firm model of these funded trader programs. Oof. And I've recently been on a rant about them. And what many people see in the future space or the Forex as these funded trader prop firms, they're not real firms. Most of them are scams and not providing real education. Right? There's no training, it's just these bullshit combines to try and get you funded. And not that they aren't legit or not that they aren't okay for some people, but that is night and day difference from a firm that provides you a salary, an education, mentorship, and all that other stuff. So if you're able to access the type of prop firm that I worked for, I think it's a no-brainer. If you're trying to access the other type, I think you need to be really, really cautious. For some people that need capital, it might make sense, but so often what happens is they inflate the commissions, they add a bunch of rules, they add a bunch of constraints, and then they make it hard for you to ever win. The whole game is rigged against you in that model. You can still, some people can still beat it, but I do not generally recommend most of them, and I view them to be fairly scammy. Does that make sense? Sure. So the question was, what is easier for me, small caps or blue chips? And so one concept that I've been pretty vocal about is the concept that I call the broken slot machine. And the analogy I give is if you walk into a casino, most of the games at a casino are designed for you to lose, right? And every once in a while, there is a game that, take like poker. Playing poker against very bad players, you can win. Against a normal slot machine, you're never gonna win, at least over the long run. And so I use that analogy because us as traders, what we need to do each day is we need to find what stocks in the market are broken, in the sense that they offer us the ability to beat the market. And so some people have their identity as a trader. They say, I'm a futures trader, I'm a small cap trader, I'm a Forex trader. But for me, I really wanted to go whatever is just offering the best opportunity. So if small caps are really in play, or there's something moving amazing, I want to trade it. But if you have the identity of saying, oh, I'm just a small cap trader, what happens when that weed headline hits yesterday? Do you not touch it? But what if there's really easy money in that? What if there's something like SMCI this year? What if there's something like all the moves in Bitcoin, right? I don't identify as a crypto or Bitcoin trader, but if there's really good moves there and that's the best setup for my playbook, why would I not trade that? And so I don't really view, I very intentionally try not to have the bias that I'm X type of trader or Y type of trader. And I just want to go to whatever's offering the best opportunities. And so throughout my career, there was no bias. Whatever, sometimes small caps suck. Sometimes they're not moving, sometimes they're not going anywhere. I don't want to be trading small caps then. Sometimes there's a ton of merger and acquisition headlines. Sometimes you have stocks like the semis going euphoric. Whatever is going on and making the biggest moves, or like the Reddit IPO. So I always want to be moving to whatever is showing the most volatility and the most volume and everything else. Does that make sense? Good? Cool.
Here. Sometimes I hear you in some interviews that you told or you were explaining that when you find A+ setup, you were sizing like or risking 3 times, 5 times, even 100 times. So my wonder is, what if this A+ setup doesn't work? Do you go with a huge drawdown, and how much does it take to get over it?
So what happens, I guess for context, a lot of what I argue is as you get more experienced, you want to bet much more on your best setups. And the analogy I give, like in poker, is if you have pocket aces, that hand is so much better than 2-7. You don't want to bet twice as much. You want to potentially fold 2-7 and bet a ton on the pocket aces. And sometimes you can have really, really, really amazing hands. And I see a lot of traders that bet the same amount each time. But most times the setup isn't the same quality. And so what I really push people to do is if you can identify what your best setups are, what are the easiest setups, you want to bet as you get more experienced exponentially more. So what really surprises people is even when I was in 2020 and 2021 and doing incredibly well, on the average day, my default risk amount that I was willing to lose on the average day was $20,000. $20,000 for my trading isn't that big. So guess what? There would be certain days though where I would be willing to risk $1 million or $2 million, right? So that alone is just so much more. That's 50x. And on the slow days, I might not even be okay losing more than $5,000. And so I think that's what it looks like at a very extreme level. But I think even for the average trader, right, if you're a beginner, it should never be that extreme, right? But if you're a beginner and if your average trade is $50 of risk, if there's some setup that you think is really, really good, I think you need to start asking yourself, what would have happened if on my best setups, I bet $70 or $80? And if you run the math and if you built a spreadsheet to kind of just model out what that looks like, your expected value and your results just get so much better. And it's not a linear improvement, because what happens with trades is the really, really good ones are just so much better than the average marginal trade. And when you then bet so much more on those, it just has a very big exponential impact. Again, you want to do that prudently, like you don't want to go nuts or anything, but as you build up that skill set to really differentiate your bet sizes, it really, really helps. Someone asked me this earlier, like, how do you know you made it at trading? My answer was, if you can cover your cost of living and if you can do it as a job, that counts in my book, you've made it. So we really want to get everybody in this room to the point where they made it and they can do this as a profession. And so what's the best advice to get someone to that point? That's where I really recommend what I call kind of the easy money trades. And an easy money trade, I give the analogy of, imagine in basketball a free throw or a layup. There's certain trades for each person that you can develop where it's not super fast, it's not super risky, it's not something with halts, limit up or limit down, it's not something with overnight risk. It's something that is replicable and for you makes sense and is easy to execute. And so I've given a couple examples of what my own easy money trades were. Early in my career, there was this pattern, and it was just essentially an exhaustion gap pattern where you would have a big up day, another really big up day, maybe a third, and then that fourth day it would gap super euphoric. And this was a pattern I studied and databased all these nuances about it again and again and again. So this was something where I knew if I saw this pattern, probably 80–90% of the time it was gonna work. So that for me became my first easy money trade. And I started small size. And because that was my easy money trade, I then started to scale it. And another easy money trade for me was, and this is going back 15 years now, but a lot of, especially on witching days, you would get volatility off the open where some of the tech stocks would move away from the NASDAQ. So if the NASDAQ is up 1% and most, like a Microsoft, Nvidia, Intel, Apple, they're all up 1%, off the open you would get one of them that might shoot down to 0% or shoot up to plus 2%. And I would do a little mean reversion play waiting for the turn. And this was something that was replicable. It probably happened a couple times a month. And I was very specific in just trying to build these little playbooks and just say, okay, I see this time and time again, I can make a little bit money, and then you want to just grow that and focus and refine that. And I think as new traders, we're always focused on the home runs. Who's the person on Twitter that made so much money or did this or that? When what you really want to focus on is what's the easiest trade that makes sense to me for me to make $100. When I first did these trades, that was my goal. I was trying to make $200, $300. But the more I was able to do that consistently, the more I was able to then size those up, and that became $500, $1,000. And if you're able to do that consistently, congrats, you have a career. And so I would challenge you all to think, like, what is the trade that makes the most sense to you? What is the trade that you're confident you might be able to put up $100, $200? And if there's something you're thinking of right now, again, going back to that trading community, can you all group up with 5 or 6 others from this conference, and maybe you guys do a Zoom call and you share each of your easy money trades. So you learn from each other and you share them, then rather than having one, you can have 4 or 5 and start to really build those out as just basic layups. You're welcome.
Yeah, thank you very much. To be completely honest, it's my first day ever seeing small caps. I come from a quantitative hedge fund background, and one of my main questions here...
Smarter than us, definitely, 100%.
No, absolutely not. I'm not the one on stage, so I'm probably not. My question here is, today debating with some traders here, I came up to the conclusion that some of the strategies that you follow are kind of conditional branching, so if this happens, then I might take this path. Some of them seem to be more subjective, so maybe an ensemble of machine learning algorithms could work here. So my first question is, how is it that no one here is using algorithmic background for this? Normally, if it's too good to be true, it's too good to be true, so that's one thing. And then the other question here is, to me, and coming from this mathematical background, it seems that many of you, when you're doing your statistical backtesting, you're just doing like backward looking. So you're seeing historical patterns and assuming a repetition of this in the future. So how do you measure the alpha decay on each of the patterns, and how do you decide when to stop trading one?
A lot of this stuff is very, very complex. And what the professional trader is processing as far as variables is extremely, extremely high, and some of them are somewhat subjective. Obviously, anything can probably be quantified, but if you were to give me a chart, right, like I'm looking at the nuances of the intraday chart, I'm studying how tight a consolidation is, I'm studying how in play is the stock, does it have a news catalyst, how much volume is it doing, what does the daily chart look like, what has been working really well recently in different stocks, what does the level 2 box look like? And so when you start to put all these variables together, it's amazing how much the brain can process over time. Like my analogy for this would be, you've seen how much Elon Musk is struggling with automated driving, right? A 17-year-old can drive a car safely. How come a 17-year-old that isn't that smart and doesn't have that much experience, how come they can drive the car yet it can't be programmed as easily? Which is kind of amazing, right? Like it shouldn't be that complex, but when you break down what your mind and your eyes are actually processing and doing, it ends up super hard. So I've had a friend that works for one of the best quantitative firms out there, and he's a developer for them, and so he wanted to program with me some of my strategies. The amount of time it took for us to get anywhere was so crazy, because it's just so complicated. Yeah. And so I think that's largely what prevents a lot of it. And you also need people with your skill set to mix with people with these other skill sets, which I think is rare, because I think most people with your background do work for the hedge funds and don't generally mix. So I recognized that and thought, oh man, this could be a cool opportunity, but it's just super hard. And this is coming from someone that does it for a living and is one of the best at it, and we just couldn't program this thing. It was just too complicated. Like, not that it's impossible, but it would have taken a crazy amount of hours. That was the first part of the question. What was the second part?
Well, first of all, thank you very much for your answer. Yeah, I find it like, it's probably true. However, of course, I think we will try with Nacho.
It's possible, without a doubt. Like, I think we could have done it, but it was just going to be, he has a full-time job. So it was going to be crazy time-consuming.
So the second one was in terms of overfitting. This is some of the hot topic now in academic research. So it looks to me that you're kind of doing descriptive statistic on historical patterns, and one of the assumptions on quantitative finance is that prices follow stochastic paths. Therefore, extracting patterns, it's a bit sketchy, and using them to infer causality on future repetition, it's somewhat complicated. So how do you measure the alpha decay on your patterns? Like, you're trading one pattern, how do you decide that it's not working anymore?
Sure. So really in trading, there's kind of 2 types of things. Like, you can do back testing, which is collecting data from instances in the past. So I might say, okay, on the CPI number, what has the market done based on how much that number is versus expectations? And you can collect all this data and you can build a system based on the past. Then there's also forward testing, where rather than looking at the past, you just test it going forward, especially useful when data isn't available, right? Because the CPI number started to really move the market in 2022. Why is that? That's because we went over a decade with no inflation, right? Rates were zero for a huge chunk of our lives. And all of a sudden, because of all the quantitative easing, we needed to start worrying about inflation. So the market never, ever, ever cared about CPI. Then in 2022, it started to care a lot. So you can't backtest and look at the last 10 years of CPI because it's no longer relevant. You need to move forward. And the point is that in trading, this type of analysis is difficult to get the right mix between backtesting and forward testing. And the real question was, how do you know when the market changes? And there's no really easy answer because like most things in trading, it's complicated. If I could give an answer to probably every question, it would be, well, it's kind of nuanced and complicated. And so it's helpful to have data, but then it's also helpful to have an understanding of how markets work and how traders think. So how many of you all saw the ticker GL, Golf Lima, on that Fuzzy Panda research, the insurance group that went down like 60%? Do people kind of know that ticker a little bit? Hopefully. This ticker had a short report come out and it got crushed. The person that issued the report was Fuzzy Panda Research. Right. I knew who they were, but I would bet most people in this room didn't know who they were. So the stock goes down 70%. I don't want to look at the back testing for how often this guy moves that report because it's not going to be that good. But I can tell you the next report he issues, do you think the effect is going to be huge? Definitely, right? Because he's the hot hand right now. And so a lot of stuff, you need to kind of think, what are traders thinking about? And using the limited data you can, and then adapting as stuff happens, right? So if I have a strategy that generally wins 8 out of 10 times, and then I go 0 for 4, you can do the math and see whether that's likely or not, and the market's always changing. So that doesn't mean you want to cut out the strategy, but you do want to start to adapt. And there's going to be times where everything in the market is working. Every breakout you play, like with the semiconductors, right? When ARM Holdings and SMCI and AMD and NVIDIA, when all of them were going crazy, the probability of a semiconductor breakout working was really, really high. But you can't look at the past 5 years because semiconductors weren't in play because of AI. But using a framework of logic, you can say, oh my God, this market is different. AI is the theme, this is gonna work. I don't need data. So does that kind of make sense? That it's just complicated?
Amazing answer, yeah.
Yeah.
If I could add something on that as well. Yo invertí $1 millón en 2012 a un tipo que se fue de un banco, él trabajaba en Goldman Sachs and USB. He was a high frequency trader. He wrote a book about it and everything. And lo que quería hacer fue traer su estrategia y hacerlo por su mismo. So yo lo invertí en él para que él tenía los datos y una oficina y todo eso. Porque yo quería compartir en su estrategia, porque funcionó ahí en el banco, right? And he was able to make 20-30 million for the bank. Come to find out, without the same leverage and access that the bank had, his strategy was complete shit. And they couldn't get it to work. He didn't have the same infrastructure. There was a lot of things that he couldn't get access to. So we tried to pivot. And he was only as good as his code. So he had a strategy trading bonds. He was a market maker for bonds. And it worked for about 6 months. But that edge closed up and his code no longer worked. And I lost $1 million. And this guy was a genius, you know what I mean? Self-proclaimed genius. His father invented the damn cork, you know? He was a physics genius here, you know? So, lo que él estaba diciendo, lo que están haciendo criptomonedas, porque es libre de costo, right? Ahora mismo yo estoy tratando de hacer lo mismo con mi estrategia. I'm having problems with data costs, server costs. I got to pay the programmer. The programmer doesn't understand my language, which is trading language, right? So there's a barrier in between what I say and what this kid thinks I'm saying, right? And you know, it's poco complicado. I'm not saying you can't do it, and we should all try. I think the closer we get now, the costs are coming down. Crypto, you can get data. You can suck out data from wherever for free. In options, I got to pay per name, por nombre, and then I gotta pay per year and per like strike price, right? So if I want 20 names and I want the 1 year history, I gotta pay like 20 grand. And if I want live data a month, I gotta pay like another 20 grand a month just to get the data I need to prove that I got a goddamn strategy. So it gets complex, man. Once you get in the weeds of this stuff, it gets complex. And the way that we trade and the way that a lot of us trade, it's very discretionary. We're all analyzing so many things at the same time, and we all do it so much differently, you know? But there's a way, man. And if anybody's gonna figure out, eres tú.
I hope.
Eres tú.
Y tienes tiempo para hacerlo. 22 años. No, marico, tienes tiempo para hacerlo.
Hi, Lance. From the S&B Capital, when you the courses that they also provide, they kind of preach that you try different things, so that you can also get used to what also aligns more with your way of trading. But you also were talking about the broken slot machine, which is a bit more of specializing on something and getting all the nuances that you can find out from the past. Touching a bit with the way that we need to adapt to the market, is it better, according to your experience, for a person to actually focus more on one play, studying all the nuances, and also looking to adapt it depending on the market conditions, instead of trying to do like 5 or 6 plays from the playbook?
Yep. So one issue that comes up a lot with trading advice, especially over the internet, is it always lacks nuance, and it's really hard to give general advice. And so when people say, should I be refining one play, or should I be learning a variety and experimenting and exploring? Your point is, isn't this a contradiction? Like, which do you do? Which do you focus on? And the issue is, it really depends where you are in your career. So when you're very new to trading, if you don't know what's out there or what's going to make sense to you, or what your strengths are, like let's say you absolutely hate quick decisions. If you hate quick decisions, should you be doing scalping or super short-term trades? Probably not. But let's say you love biotechs and you have a background in biology and you used to go to med school. Then maybe biotech trades are something that are worth exploring. So in the beginning, I think you need to really figure out what makes sense to you, what could you see yourself doing, what plays to your strengths, and then you need to refine that play and and figure out within there, what are your easy money trades? How can you replicate this and put up $100 again? But sometimes then, say you find some edge in small caps and you're able to make $100. But then small caps all of a sudden aren't in play. They're not moving, it's quiet, nothing's moving. The advice changes. It's no longer worth you still trading small caps and refining that. You need to go back to exploring, because what you are currently doing is just quiet for now. So it really is dependent on where you are in your career. And so I would say once you've explored, you want to refine. Once you refine, if you're really good at that and you want a more diverse playbook because it's slow for your market, that's generally when it's time to expand and learn again. And so I would say it's really both, and that's why it's so confusing. Does that kind of make sense about that? Yep. And so, but what I would say with the broken slot machine, like I view it as just a total requisite. Like it's mandatory that the stock needs to be in play. If you were to tell me, Lance, you need to trade 5 random tickers every day, I will never ever make money. I will 100% lose. If you pick the tickers for me and you pick random, I'm going to lose every single time. If you allow me to pick the tickers, then I can stand a chance. So you always need that, but then it's within tickers that are in play and doing big moves and stuff, what makes sense for you and your strengths? Yep. There is one question right there. Yeah.
Thank you. First of all, thank you for all the free content you're putting out there. And my question was regarding the proposal of 24-hour trading. Do you think that this is going to reduce our edge because we are taking advantage of the volatility, the range, and so on. And as the 24-hour trading maybe implies more algorithms, automation, stop loss, 24 hours, maybe it reduces those opportunities to us. And if you have experienced it, the Nasdaq before the extended hours, before they applied the pre-market and after hours, maybe you have some experience on that?
Yeah, so my guess is with the 24-hour trading, I can't imagine there will be that much liquidity. Like if you look at stuff after hours at 7 p.m. or at 4 a.m., most stuff doesn't really have liquidity. So I would suspect even if they do that, the spreads are going to be really, really wide. I kind of think it's just like a big headline about nothing. Like if it did occur, I think, would it be better or worse? I think if you're willing to stay up, or if you're on different hours and you want to potentially catch news or whatever, like maybe it's better for you. And I think if there's 24-hour trading, there probably would be less opportunities off the open, because so often when the stock market opens at 9:30 Eastern, you're getting extra volatility and volume that hasn't been able to cross prior in the day. But overall, I could be wrong, but I do imagine that there just wouldn't be much liquidity. Like, there's just not enough people that are willing to take headline risk and all sorts of risk. And it's like, there are some brokers that allow, and I think this is why NYSE proposed this, is because there are some brokers that are allowing 24-hour trading, or at least much, much more extended. And even when you look at that stuff, the spreads on these things are just horrendous, and it's just not really meaningful volume. So I don't think too much about it. I don't think it'll be a big deal. And I don't think it'll be too good for anyone, but it'll just ruin the sleep and stress for a lot of people.
Okay, thank you.
Yeah.
Hi, Lance. It's Paul from Barcelona. Bienvenido a España. I would like to make you a couple of questions. Feel free to ask both of them or just one. The first one, both are related with energy. The first one is how you tune or deal your energy to keep your discipline and the work ethic when your surroundings regarding life drags you down and you're a bit low. And then the second one, if you want, is about the ayahuasca experience you had. How that unlocked or expand your consciousness. Thank you.
Sure. And so the first question, if I heard correctly, was, and feel free to just kick me off at any time, Eduardo. I know my tiempo is, I'm taking other people's time. So the first question was, how do you just kind of maintain energy and enthusiasm through a difficult job, essentially, right? And like, how do you keep at it? And so who's struggled at trading? Like, I'm sure every single person has struggled, will always struggle. And I struggled too. It probably took me close to 2 years to become profitable, despite having all the resources I had. And the first year of my trading, I was working so many hours. I was probably working 60 hours, maybe more, per week. I was going in every Sunday to study. All I could think about, all I could do was trading, and I sucked. And I just lost money. And it's frustrating, right? I'm sure everyone here is hardworking, everyone here is motivated, everyone here is smart, and you go through life being successful, and then you're just like, oh my God, how is this, ay Dios mío, how is this so hard? I gotta sprinkle it in. And so you're like, how is this so hard? And you face real adversity. And I don't think most people you talk to that are not traders, nobody will ever recognize how psychologically difficult trading is. And there were so many times I wanted to quit. There were times I was literally in tears. I kid you not. There were times where my boss, who was, at times somewhat of an asshole, he would just flip out and scream at me. You just have a guy in your face just telling you what a dumbass you are. And there would be times where you would just feel like a total failure and just be sitting there crying. And you're like, God, I'm a grown-ass man and I'm crying in this seat and this is awful. And it wasn't until later in my career that I really developed a lot of this and really formalized it. And you hear Mike Bellafiore from S&B Capital talk about it all the time. And the best answer really is by focusing on the process. What are the tasks you need to do each day to succeed and stand the best chance? So for me, I learned eventually to totally remove myself from caring about P&L. My goal was not to be green or red. My goal was just to be a little bit better each day, right? So my goal was to get good sleep. My goal was to go to the gym. My goal was to be as focused and not distracted during market hours as possible. My goal was to do at least an hour or two of review after hours. My goal was to not leave the office until I was 1% better. And by allowing and forcing myself to focus on the process, it removed so much of the emotions, and you turn something that's psychologically difficult and you turn it into just habit and process. And the same way where like me going to the gym each day, it's just part of my routine now. I don't think about it. I don't feel lazy or unmotivated. It's just, oh, this is what I do at these hours. And so I would say the more you can build a structured process that you follow through the good days and the bad, the more you can remove yourself from some of that. Does that kind of make sense for that?
Yeah, sure, kind of. The question was more in a side. Let's say you are doing well in trading, but just your surroundings, family, life, whatever, demands a lot of energy. So you need to tune down or dial the amount of hours you put in trading and so on. How you balance that, or how you face this thing?
Yeah, well, I think that's just life at the end of the day, right? There's going to be times when you can, especially if you have family or kids or whatever, there's going to be times where you can put a ton of time in, and there's times where you can't. And my challenge to you then would be, what are the process steps that are non-negotiable? What are the things, even on your bad days or your busy days, you will still do? And right, sometimes you get sick, sometimes there's funerals, sometimes it's impossible, right? But the question is, when you're really, really challenged, maybe your rule is, no matter what, I will still do my daily report card. No matter what, I will still write up one chart. What are the non-negotiables, and making sure you stick to that, and just getting the check mark. I did what I had to do. It wasn't perfect. Like, look, I didn't crush my workout. I wasn't 100%, but I at least made it to the gym and raised my heart rate. And so that's how I would think about it, and just accepting it and not beating yourself up. I think as traders, we tend to be perfectionists, and we tend to beat ourselves up and be so hard. When the job's already, like, the market is going to kick our ass for us, we don't need to kick our own ass, and just be understanding of yourself, and that life goes in waves, and there's going to be times that you can be a hero, and there's times where you're like, a success is just simply saying, I did my best, here's my one chart, and that's it. Then the second question, so I had done an ayahuasca experience, which was being referenced. This was in Costa Rica, and so you asked, like, pretty much like, what was the long-term just.
After it, did you look at life from another angle, or there's something in your consciousness that make a click?
Yeah, I mean, I think a lot of these things are kind of hard to describe and kind of personal, but especially after the fact, there was definitely a big perspective shift where probably for like a month or two after the fact, I remember sitting in traffic. So many people in Chicago traffic or wherever traffic get so upset and so pissed off, and I just didn't care. It was like, okay, it's going to take me however long to get there. And my big takeaway from the experience, if I could put it in one phrase, is you are where you're supposed to be. And it's so easy to get caught up like, oh my God, why am I not a better trader? Why am I not a better this? Why is this wrong? I hate this about myself, or this or that. And it was essentially kind of just a lesson on acceptance, and just not necessarily fate, but just everything that brought you to your seat and in this moment right now, it all happened, and it just is. Like, for whatever reason, the world we live in, it is how it is. And rather than get worried about everything or concerned, just living in the present and accepting things for what they are. Yep. In the back, do you want me to get that?
That one has been doing an exceptional job, that trader over there that was going to talk.
Yeah.
Mm-hmm. He's doing an amazing job.
Hi, Lance. I wanted to ask you, because right now you are the guy giving the advice to the new traders, but you've been in touch with many people before, and while you were developing as a trader, I believe that you were also given many good advices. So I wanted to know, was there any piece of advice that you received while you were developing as a trader that was somehow a breakthrough for you?
The most important piece of advice I ever received was when I was actually very close to quitting. So I was probably a year and a half onto the job and still not making money. And I had student loans, I had rent, I had all sorts of expenses. And you start to question, like, will I ever make it at this job? Like, I think I'm smart and can do it, but clearly it's been a year and a half. Like, I don't know. I've spoken with some of you here. Some of you guys have been struggling for years, and you ask yourself, like, it's totally reasonable to say, like, can I do this? And I had been interviewing for other jobs, and even while interviewing for those jobs, it was the question of like, man, I'm working 60 hours a week and trying to interview and get a different job. Like, should I just pull the plug and focus all my effort on this? And so I spoke with one of the people in my little trading pod group at the firm, and he was the number 2 guy in the group. I didn't want to tell my boss because I was scared that he would just fire me or something. So I told him, and pretty much he saved me from quitting. And he had said, Lance, like, I can tell from the stocks you call out and from the stuff you're looking at, I can tell that you understand what needs to be done and you get what works. Like, you conceptually understand it all. And I think if you don't give it another 6 months or another year, you're going to really regret it. And 6 months to a year in the grand scheme of life is nothing. And if this pans out for you, like, you have the potential to do really well. He had done really well. People around him had done really well. And I don't think everyone should always keep going for many, many years. But I think the big questions are, do you love the job and enjoy it? Do you see improvement in yourself? And are you willing to just keep on putting up with the struggle and not regret it? And I think the big thing for me was, like, I wasn't making money yet, but I was improving. And as long as you just keep on improving and keep on working hard, if you are making progress, eventually you get across the finish line. And if it wasn't for him, I wouldn't have stayed. But I needed someone to say, like, look, man, like, I see that you get this. Like, I see that you understand and you're improving, so just keep your head down. And otherwise, I wouldn't be here.
Cool, thank you.
Any other questions?
I would like to know if you have ever lost your edge, and if not, if you had to learn new strategies or learn or to adapt to, if you were profitable trading small caps, then if you had to learn new strategies, trading mid caps or large cap, and how did you approach this path?
Yep. So I think no matter who you are as a trader, every trader that's been around for years has in some way had to adapt because the market's always changing. Stuff that used to work 15 years ago doesn't necessarily work today. So I can tell you that easy money trade I discussed about how some of those tech stocks would diverge from the NASDAQ off the open, that play doesn't really exist anymore today. And so I would say a lot of my framework and my conceptual understanding, like waiting for the right side of the V and waiting for the turn, I think that's just a true principle. That will always exist, has probably always existed, and will always exist, right? I think a good technical setup, like if you were to show me a chart from 1990 or 2002 or 2008, a good chart back then is still a good chart today. So I think a huge amount of technical analysis has stayed exactly the same. I think risk management has stayed exactly the same. I think my views on bet sizing, these are all just principles that don't really change. But then very specific things I think come in and out of play. So the CPI number was something where you needed to adapt to. After 10 years, CPI hadn't mattered. Now inflation matters, and that's the biggest market moving event. The past year, we saw the wave of AI stocks. And so the breakouts, the chart patterns are the same, but you need to recognize that the hot sector has changed. There's times where IPOs will totally suck. Like every IPO will be just crap, but then there's times where you're in a really hot IPO market where every IPO holds the opening bid and just goes. And so you need to make those adaptations, but I would say the chart is still always the same and is always telling the truth. So you can have the same framework and the same system and all the same principles, but then it's knowing when do you need to really, which spots do you really need to jump to? If you were at Trillium and you were not trading CPI in 2022, you're crazy. If you were at SMB or Trillium these last few years and not trading the semiconductor stocks, you're crazy. And so what I've found is in retail world, most people stick to their small caps or they're this or they're that. And what I've seen from most professionals is they're much more keeping the same system but applying it to whatever's working best. So you always need to adapt, but a lot of principles stay the same.
Okay, thank you.
Yep.
What are the key takeaways that you take for every brilliant trader that you've met? What are the common traits that they share?
So what's interesting about trading, and so I first got into trading from the Market Wizard books. And it's just a series of interviews with some of the best traders of all time. And what I found so interesting about these interviews was you had people doing quantitative analysis, you had people doing just pure discretionary, you had people doing psychology stuff, you had people beating the market, every strategy under the sun. And so as I've met many successful traders, I don't think there is one way to do it. I actually think there's more differences to most people, but if I had to pick what's similar, you need to be hardworking, you need to be open-minded to the feedback that the market gives you, and you need to always adapt. You need to just have a passion and love for the markets, or at least you need what I call a really strong why. And so I think to put up with how hard this job is, you need your why. My why was I enjoy trading, but ultimately I grew up with not much money. Money was always an issue in my family, and I wanted to not live the life that my parents lived. And so for me, that was my why. This was like playing a computer game that could potentially make you a ton of money. And so I don't think every single good trader that I've met is like, oh my God, I love trading, it's the best game ever. But I do think all of them had a really powerful reason to put the work in and to deal with all the punches that happen from the job. And I think another thing that's important is not having a ton of limiting beliefs. One thing about working for Trillium in a prop firm is I've seen probably 300 people try this job just at Trillium, because every class each year was, I don't know, 30 guys. There were 120 traders at the firm. So for 10 years, I saw 30 different guys take a stab at this. And you see all the things that make people not good at the job. So some people can never divorce the money and from the number on their screen. And every time they're red, all they can think about is, oh my God, I lost X dollars. Which is even funny, because the reality is it's the firm's money anyways. Who cares? And the other thing too is there were so many people out there that just had so many limiting beliefs, and they would say, oh, I could never do X. I could never be a news trader. I could never be a small cap trader. I could never get that kind of size. I can never get good at earnings reports. And I think if you end up really good at this job, you recognize that rather than see Lance, the trader, that, oh my God, I could never be as good as him, actually, let me turn that around a little bit. At Trillium, each year, there was this top 10 award ceremony. When I went to that end of the year award ceremony from the very first time, I looked up at that stage, and it was just a bunch of young people, like in their mid-late 20s, early 30s, and when I looked at those people, all I thought to myself was, oh my God, they're not so different from me. Like, that person is just a normal guy just like me. Why can't I be like that person? Do I have a track record? Yes, but like, I'm no different from you all. The only thing that's different is I put in all that time for 11 years, a zillion hours per week. And there's nothing that stops you all from being able to do that. And I think so many people just have in their head, they tell themselves these stories that they can't do something. And it's like, my mindset was, if anybody else can do it, why can't I? There's no such thing. I wasn't gifted to magically trade news. I wasn't gifted to be good at trading capitulations or small caps. I don't think I was gifted at all for this type of thing. And so then it's just saying that, like, why am I so different? And the truth is you're not. It's just, are you willing to pay the extremely, extremely high cost to succeed in this industry that requires a lot of sacrifice.
Is it different to trade your own money than the firm's money? Like in your mindset, is it different? Do you trade different? Do you do something different, or is it the same?
I do think that if you're starting out on your own, trading your own money is of course going to be way more psychologically difficult. And I think it's harder to divorce the number on the screen from recognizing, oh man, I just lost a nice dinner with my girlfriend. I just lost the car I wanted to buy. I just lost 1 month's rent. So I think when it's your money, it is way harder to divide that and divorce yourself from that. And that's why, and I've been speaking with some of you all, my advice, if you're starting off new, you want to trade as small size as possible, right? Like our egos prevent us from doing that, but if you're not making money, you want to be either trading a demo account, you want to be trading just one share, you want to minimize the tuition you're paying to the market. We all hear that losses are market tuition. Just because losses are market tuition doesn't mean you need to say, hey, let me ring up 500 grand to that. That's not how it works, right? Like if you lose, if you're relatively new and you lose 20 grand for no reason, you don't get 20 grand worth of experience points. It does not work that way. So you really want to minimize your losses as much as possible in the beginning, trade as small as possible until you really build up the data and the experience, because it does get harder when it's your money, and drawdowns are harder, and so yeah, it really makes it. This job is not easy psychologically and for a lot of reasons, and you want to do everything in your power to stack the odds in your favor. You want to give yourself the longest runway possible. If you are doing this part-time, it will not take 1 year or 2 years. Despite my latest Fuvru battle with the woman that started shilling courses 6 months after she started trading, 0% chance. There's a 0% chance you will succeed in trading in 6 months. There's near zero within a year. And so the point is, especially if you're part-time, especially if you don't have the same resources, you need to give yourself the longest runway possible. And if it's your money, don't waste it.
I wanted to ask you about the liquidity issues that you come around when you scale to that level, on small caps especially. How do you deal with that kind of issues?
Yep. So the reality is, the most important thing is to always think of trading in expected value. If you don't understand expected value, you need to go back to square one. And there's, I don't mean this in a mean way, but I see online all the time that so many retail traders do not know what expected value is. They do not understand it. They do not understand how the variables have different influences. And so it's just the essence of everything we do as traders. If you are not putting your bets on trades that have positive expected value, you will not win. It is mathematically impossible to win over the long run. And so, based on liquidity, as you get to be a bigger and bigger trader, the size you trade is going to impact the expected value of each trade. So there might be a trade where you can do it for 500 shares and it's a really good trade. If you try to do it for 5,000, it might be an awful trade. And I think with experience, as you do this a lot, you gain a feel for how much liquidity certain plays have, and you can't fight that, right? If this play that is perfect for 500 bucks, if I try and make 50,000 in it, I'm going to lose 50,000. Like you can't force more out of the market than what exists. And I would argue if you're a smaller trader, there's advantages in being a smaller trader, because if there's a play where you can make 20 bucks, 50 bucks, 100 bucks, I'm not even going to touch it, right? I'm not going to look at it. I'm not going to see it. I'm not going to want anything to do with it. But that is actually a competitive advantage for smaller traders. And so yes, liquidity matters. Yes, you can even use that to your own advantage. Yes, I would argue there's a lot of stuff where people aren't looking at because the size might be smaller. If this trade can only make 500 bucks a week or 1,000 bucks a week, do you think the hedge fund Millennium or Citadel or Lance or whoever is going for it? No. But that's actually a good thing because that can be your opportunity. So to give one example of this, Trillium did a lot of news trading. And there are some headlines that come out 6 a.m., 7 a.m., 8 a.m., and one of my trader roommates in New York when I was kind of 4 or 5 years in, He wasn't that good of a trader. He didn't end up making it, but the best thing he did was he recognized, oh, all the older experienced guys, they're not getting in it at 5, 6 a.m. He would get in at 5, 6 a.m., he would have his little news sources, and he would develop a little niche trading these plays pre-market where there wasn't a ton of liquidity, but if he was able to make $500, $200, $300, it was awesome for him. Unfortunately, like the rest of his trading sucked and he didn't fix it, but like that was an advantage that he was able to recognize. Like, you know, you're not going to get the older, you know, super experienced, super wealthy trader going in at 5 a.m. to just pick up the $200. It's just a reality, but that's a good thing. And so yeah, liquidity does matter, but then even for many, it can be an advantage.
Thank you. And my last question, sorry.
Go for
it. How do you tag your trades, and how do you keep track of your daily trades to improve?
Yep. So one of the most important things is, of course, reviewing trades and reviewing your data. So I used Evernote. Some people use Notion nowadays. It doesn't really matter how you tag your trades, but the most important thing is just that you're really starting to systemize and build out what I would call different playbooks. So I might have, okay, these are all my breakouts. I want all my breakouts in one folder so that I can look at all of them. Okay, these are all the IPOs. I have notebooks. If I were to log into my Evernote, I have notebooks where I have, you know, 200 IPOs, or I have the history of every short report, Fuzzy Panda Research or whatever, Carisdale, Citron, Muddy Waters, all these people, I have every single short report. I have exhaustion gaps going back 15 years. And so you want to build these categories of trades that make sense to you. You then want to start to rank them and identify what variables are best. And then as far as other data, you know, there's infinite patterns that you can figure out. Like, for example, it became extremely clear to me that if I go to work hungover, I lose mucho dinero again, you know, because of la fiesta, you know, too many cervezas or sangria. And so that data was something I tracked, and I'm like, oh my God, I am losing so much money when I could literally be home on the couch watching Netflix hungover. Like, why do I do this to myself? And you realize, like, you're an idiot and I need a change. And there's other stuff where I saw how much my sleep was impacting my trading. You know, sometimes you just get bad sleep. Maybe you're stressed out about something, maybe you're sick. And so there's really infinite data you can collect. And I think it's just being smart about, like, what are the things that are material and moving the needle. Like, some people look at different time periods, 9:30 to 10:30 a.m., midday, around the close, breaking news headlines versus IPOs versus breakouts versus capitulations, everything under the sun that you think is going to lead to a conclusion is probably worth tracking and using tags for.
Thank you really much.
De nada. Algo más.
¿Hay una pregunta más por ahí?
Vale. That's a local word.
Thank you so much, Lance. Well, I'm Luis from Barcelona, and I take the mic for two reasons. First of all, because this is completely out of my comfort zone, speaking in front of so many people. And second, because I'm noob, I'm just learning, I'm still not trading nothing. What would be your advice for someone like me or for people who's starting right now as a technical advice, a part of working really hard and studying a lot? Thank you.
Yep. Hard question. Surrounding yourself with others, especially others that are new. So even, do you guys know, like, Mr. Beast, the YouTube star? Like, I've listened to some of his interviews, and he's the best that's ever done that by a million miles. And his story is, when he was growing up, he found a couple guys on the internet that were as obsessed with YouTube as he was, and together as a little YouTube pod, they just nonstop started studying every single variable. And they did it together, they all pushed each other, and he attributes his success to having all those other people help him push and learn, and you just learn so much faster. He was learning from their mistakes, he was learning from their wins, and they were all sharing it. And so I would say the more you can share lessons and mistakes and knowledge with other people and get some emails and everything else from here. That's going to help. The other thing is there's no substitute for just studying a ton of charts. And so what I would recommend is the tickers that everybody's tweeting about. SMCI, when SMCI was going crazy, the weed stocks yesterday. Every chart that everyone's talking about, just start cataloging and databasing those and just study them and just write whatever notes that make sense to you. Okay, the weed stocks made a move because weed was declassified. You can see that the volume increased a lot. These went up the whole day, and you can just start to form a hypothesis and start to reach conclusions. And the more and more you start to see, you'll start to see patterns. And so maybe you study 200, 300, 400 small caps, and you start to see, okay, the ones that gap but don't have a news event, those are the ones that tend to sell off. The ones that have a day one news event, those tend to really go. But even the ones with news, they tend to fade away after 2 or 3 days. You can start to see patterns. One of the biggest variables, and this came back to programming for some of that stuff, like whether there's breaking news or not is probably one of the most important variables in trading. If there's breaking news, like with the weed stocks, I want to be with the trend. If there's no breaking news, I generally want to probably do mean reversion, especially if it's not in play. So those are just some of those variables you can start to tell over time. Like, oh my God, why did ACB and CGC go up 40% plus yesterday? There was a news headline. Why did this small cap gap? There was a news headline. 2 days, 3 days later, why did it go down? Okay, there's no reason, but maybe the headline was kind of bullshit to begin with. And you just start to really come to your own conclusions. And so I think that's probably some of the best work. I have a lot of free videos out there that are probably useful. Each month I tweet out what I think were some of the top opportunities with the date. You can then go back, look at those charts and reverse engineer. So there's a lot of free information. I'm sure others in this room can help point you to who's trustworthy and what's going to be good, but that's kind of where I'd start.
Thank you so much.
De nada. Any final questions? Preguntas últimas. Uno más. Al dentro? Oh, God, I don't know.
Hey, Lance. So I have a question. What is, working with all those traders on SMB Capital, what is one of the biggest mistakes or one of the hardest thing that you see traders do, or in terms of mistakes, that hardly comes like out of the mind? One of those where most of the traders, even with being exposed to that environment of so many good traders, what is one of the things that they do more frequently that they shouldn't be doing, for example?
Sure. So I'm going to kind of flip that a little bit. So I think one of the most important things that leads to success is how quickly you incorporate feedback and are able to make changes. And what I've seen, so I've trained easily a couple dozen traders. And if you look at the office I was managing, I mean, with the new people I didn't train, it was I don't know, 30, 40 guys I probably saw. And the people that fail and stand no chance are the people that make the same mistake again and again and again and again, and they're never conscious of it, they never build the awareness of it, and they're never intentional with their trading day. The people that make progress the fastest, they're not necessarily the smartest. I have seen some of the smartest people imaginable fail at this job so hard, like worse than anyone else. Trillium does not even hire people with grad degrees because the data was so bad as far as their opportunity cost, how long they were going to stick with it. Despite, anyone with a grad degree from a good school, you're probably pretty smart. And so the number one trait I found was how quickly is someone taking feedback or adapting and learning from the lessons they're given. And so the one thing that's inexcusable in trading, it's okay to make mistakes. It's not okay to just continually repeat those mistakes without making progress. And so my best advice for people is like, you really want to hone in on one thing each day. What is the most important thing I need to improve on? And what is the system and that can help me make that thing? Like if I tend to be over trading, then are you going to overtrade for 2 months and still just do the same thing every single day? Or are you going to say, oh my God, I overtraded twice. I'm not going to let that happen a third time. I am going to do everything in my power tomorrow and be as conscious and aware to not do that. In fact, I'm going to have my accountability buddy where he's going to be able to see what tickers I've traded, and the second I've traded 3 tickers, I'm cut off beyond that. And so the people that come up with the most detailed, feasible solutions to make change every single day, those are the people that make the most progress overall. So it's like mistakes are okay. Never improving and fixing them is the only thing that's not excusable. And that was kind of the motto we had in the office.
¿Preguntas? Una más, verga, pero si quieres te llevas a Lance para tu casa, weón. Dale, una última pregunta ahí. I just said, bro, if you want, you gotta take Lance home or something. Oh my God.
Well, not every day you have an 8-figure trader here, so I gotta take something out of it. I have 2 last questions.
He cheated, Eduardo.
The first one is that, have you ever seen a COVID like 2020, like the COVID market, like an action similar to COVID market? If not, what is the closest you have ever seen?
No.
No.
I don't know if, no. And even from what I understand, like, COVID was probably just as good. I mean, I think COVID was better than 2008 with the banking crisis. I think COVID was probably even better than the dot-com bubble, which I wasn't trading during. And no, that market was just so far above everything else. So no, I don't think most traders have seen anything like that.
And was that the market that impulsed your career to an astronomical point, or you have been doing good, already that good before that?
Nope. So I was doing well. I was probably putting up like, I would say a normal year had probably been 3-4 million. But then with COVID, there were just, it was, the analogy I give is imagine you go to play poker and the only hands you start to get, it's all just face cards and pocket pairs. And you're just like, what, every day you're just like, what the hell? Like, how's there so much good stuff? And when there's so many good opportunities, like you can lose in any given opportunity, but when you get so many good hands, like pretty much every day you were making money. And it was just like, there were some months where literally every day I would make 5 or 6 figures every single day. And you would go in and you would just be like, what the fuck? Like, how does this still happen? And you would be like, this can't continue. And it would just keep continuing for so much of the year. So no, it was special.
That was not the second question though. My second question was, how did the start making big money change your life?
Yeah, I mean, it probably didn't change my life much. Like this, I'm going to greatly disappoint all of you, but I think beyond having your expenses covered, like nobody ever wants to believe this, but I don't think it changes your life that much. I think I'm still the same person. Most of my friends don't even know about my success really. I'm not the Furu with like 7 Rolexes on my arms. I don't have any Ferraris. I have 0 Lamborghinis. Even some of the stuff like most assets and material things I think are just a headache. And at the end of the day, I think most of happiness is just like, okay, can I do dinner with my friends? Can I go on like, I enjoy nature. I enjoy just like travel. And most of that stuff doesn't take any like it's good not to stress, but I would argue money then creates other issues and headaches as well. So I don't think, I think there's some degree of like ego where I'm like, well, I'm proud that I was as successful and I'm proud of what I achieved. But at the end of the day, I still have the same stresses, for the most part as everybody else. And it's, life. So I don't know, do most people know Mark Cuban? Is that, so yeah, no, like okay, people know Mark Cuban. And so when I was in college, I heard this interview with him, and somebody was asking Mark about what his weekends look like. And he said, oh, like I'm either still doing some work, or I'm with my kids and my family, or if I'm lucky, like I'll get a Subway sandwich and a Diet Coke, and I'll be in my car listening to the Mavericks game on the radio. And it's like, wait a second, this guy's a multi-billionaire. His life is no different. Like, obviously he doesn't worry about, paying the bills, but his day-to-day life isn't any different. And even from all the other successful people I've worked with, like, life is life. And if you're unhappy before, you're going to be unhappy then. If you're insecure before, you're going to be insecure then. And it doesn't change anything. Sorry. Everyone's going to quit. I ruined it.
Give it up to Lance. Appreciate you.
Thank you all for the hospitalidad.
Thank you, Lance.
De nada, mi amigo.